today's company finally caught a lucky break. God knows he needed it. God knows I needed it because I've been hyping this company as well. I'm a big fan of the management team. I'm a big supporter of what they're doing. And finally, we got some good news to talk about. It has been difficult for the company in the last few months to get financing and traction in the market. But this news release should sort of turn the ship around and finally put the company on track to go into production. They've secured additional financing, and Sprott's come through and is now finally putting the last bit of money into the company that takes it over the hurdle and can let them order long lead items and other finish engineering works. I'm joined by Richard Williams. He's the executive chairman of Bunker Hill. Richard, congratulations on this milestone. It's good to see you again, and I'm overjoyed. I'm just happy to see you. To be honest, discuss this today. Good to see you.
Thank you. Thank you, Brian.
Yeah, no, fantastic news release. You upsized and improved the $67 million financing package. In this current environment, it's a real achievement. Tell us about it. How did it come together? And I have to ask as well, it's taken a while, hasn't it?
Yeah, it has. I said the cliche would be good things come to those that wait, but the real story has got to be, of course, it's a competitive capital markets. And you will remember, because we have discussed this before, but towards the end of last year, certainly in Q4 last year, we initiated an equity raise as part of concluding our financing. That took a lot longer, courtesy of regulatory issues, than we expected. And then concurrently with that, we also needed to complete with our finance partner, Sprott, the technical due diligence that had been ongoing for some time. That was a sort of rolling due diligence where we were taking the sort of technical studies way beyond PEA through PFS and beyond with respect to certain parts of our restart plan. And when two things happened, one, it was clear, looking at the equity markets and then looking at a range of other non-equity finance solutions, of which we were offered many, the optimal solution for both ourselves and our strategic partner, Sprott, was to have an upsized financing package from them. And this is what we are announcing now. Your question about why did it take so long, I'll repeat again, is that what we had to do was to test the market to see, on behalf of our finance partner, our shareholders, and all other stakeholders, whether there was a competitive package out there. And relative to what we've got now, there wasn't. And so we had to hold our nerve, engage with Sprott, advance the technical work to the point at which everybody felt the project was sufficiently de-risked, and then negotiate this particular agreement that we've got here now. It took time, but I'd have to say to you right up front, and for anyone listening, that actually the way in which Sprott streaming and royalty business has operated as a partner through this difficult time has been exemplary. They've demanded very, very serious things from us, and I'm proud to say that the team has delivered it. And as a result of that, that's unlocked what you see us announcing today.
Before we get into the details of the financing package, just curious, was Sprott paying special attention to something in particular? Is there a bigger hurdle that you had to clear? Was there something in particular?
Well, you'll remember, and owners of the company stock will also know, that the original Sprott financing was financing off a PEA. And, that's it's an extremely risky proposition. And the way in which we and Sprott worked together was to advance the technical studies from PEA through a PFS, and to, in some cases, way beyond that, to ensure that the restart plan was as de-risked as you'd expect it to be at this stage, and was something that would allow us access to this financing. But in specifics, again, everybody should be interested in the specifics here. If you think with mine planning in particular at a PEA level, which is rather loose, we've actually taken it down to the point at which we've got, week by week stope planning, development planning, lockdown with, mining contractors and so on. And all of that, without going into too much detail, should paint a picture of a mine plan that is, really very precise now and that we could execute very quickly. With respect to the other parts of the plan, the processing facility, and you'll know in this press release, we refer in the next steps section to the fact that we are upsizing our processing capability from 1,800 tons a day to 2,500 tons a day as a result of upgrading the comminution circuit, the grinding at the front end, that is really very significant and interesting. And we've been doing that concurrently. And what that really did was impress upon Sprott that they, as a finance partner, have got an exceedingly interesting and valuable to them and to our shareholders mine to invest in. So I'd say upgrading the processing facility, if you wanted a specific, and then secondly, really getting into the detail of the first, in particular, first 5 years of the mine plan.
Interesting. Okay, we'll talk about that. What that means also for, let's say, economics at a later point. It's a bit tough because you haven't put an economic study around it. There's no 43-101 report. It's like a bit difficult to talk about that, right? But let's talk about how that financing package has improved. You added $9 million to the original amount, so $37 to $46 million. Have you changed some of the maturity dates as well? I think I've seen that in the press release here as well.
Well, in terms of the improvements, the stream part of it has increased by $9 million, but with no change to the economic terms, which effectively results in a materially lower cost of capital for the company and its shareholders. That's the first thing that's happened. Secondly is we've got ourselves a $21 million debt facility from Sprott, which is available for us to draw at our election for 2 years. And the combination of that additional stream, the expanded stream, and that debt facility gets us really to the fully financed finishing line. And so those are the two elements that have really come in here. But in terms of, you're right to point out, and it's highlighted in our press release, in terms of ensuring that the other parts of the Sprott finance don't come and bite us too early, we've actually extended some of the convertible debenture maturities out to 2026, which allows us all effectively to bed in the operation, get it really spinning along, generate and prove value, and then settle that part of the package. So it's been pushed to the right. And what that tells you is that, as is always the case, the finance partner is managing both, maximizing or optimizing their returns, but at the same time managing credit risk in an asset that is going into production. And from our side, we're equally managing that credit risk, but also looking not just to meeting the terms of this finance package, but working in detail, and this is obviously for another conversation downstream, at those areas that we can improve in the mine from our base case plan into an upside plan in both mining, which would then lead to grade and throughput improvements, and other improvements in the processing plant, such as recoveries. All of those things, I'd say, Kai, are where you'd expect us to be looking at. And as always, in mining discussions where we're talking concepts rather than fully baked technical plans, I'd say watch this space and you'll get all that detail on a go-forward basis. But we financed this restart plan based on a base case, realistic, conservative plan where there's a lot of upside, and that's an important point to make here too.
Oh, fantastic. No, absolutely. Realistic is key here, because I've seen so many companies fail with unrealistic predictions or hoping for a buyout in the meantime while they're only mining 3 stopes or so instead of the necessary like 8 to 12 that they should have mined, right? We've seen all that.
Yeah, Kai, let me jump in here. I mean, with all humility and in, I hope, characteristic, transparency and honesty, our team really prides itself on a past that is built upon operating excellence. Now, every operator will say that, but we've started this company to turn around and restart the Bunker Hill mine. And we expect to be judged by the market, our shareholders, other stakeholders, and anyone else who's interested in this on the basis of our ability to deliver a mine to restart and beyond that works. So we're not a team that has put in a lot of wishful thinking into our plan. We're a team that's really focused on what we judge to be realistic, and that characterizes the way in which we've crafted the restart plan. And so in mining, there's always ups and downs, but we've actually come in and have financed this on a base case plan, not an upside plan with a lot of fizz in it. That's for us to deliver as soon as we get this thing moving. And you'd expect us to see things like throughput, recovery rate, grade, etc., all to be the levers that are traditionally pulled. At the same time, that's all on the top line. At the same time as dealing with costs and other issues that buffet the mining industry as we go on. And in that space, of course, comes our arrangement with Teck, which may be something you want to talk about later.
That was my next question, Richard, exactly. Because we talked at length now about the financing package. Let's talk about the other key news item here as well. A subsidiary of Teck exercised their option for an offtake agreement. You haven't provided a lot of detail in the press release. So if you could add some more color to that, what that means and what kind of certainty that gives you as well moving ahead, and how much of a factor was that for Sprott moving forward as well?
Well, I mean, again, I can't give too much commercial detail. When we can, we will. And as everybody understands, with commercial terms related to a purchase agreement, that there are elements that the buyer wishes to keep discreet to ensure that it's got a fair playing field when negotiating with other providers of metal. So, the partnership between Teck and ourselves, and remembering that Teck is just short of a 10% shareholder in Bunker Hill. So we see them as a very strategic partner, and they've been incredibly helpful over the length of time that we've been in this operation and continuing. And to remind you that we got to that point by purchasing off them the closed, the mill at the closed Ponderay site, which we moved to our site and played our part in the rehabilitation and closure of their operation there. So we've been working together for a long time. But what this really does, and again, I'm going to be a little bit obtuse, what it really does, it locks in a purchase agreement for a minimum of 5 years to the smelter that is only a couple of 100 kilometers away, if that, where the alternative would be to throw it out into the market and have to pay transport costs all the way to China or wherever it might be. We've got ourselves a local arrangement which actually really helps our structural cost base, and really importantly builds upon the relationship that we have with Teck. And that's probably about all I can say before Dave Weens would appear on my shoulder and tell me to zip it.
Yeah, I can imagine. There's just a poop popping up on the right of your left shoulder there. No, perfect.
Again, for everybody on the call, I do that to respect the confidentiality that such agreements have to have with the buyer of the metal, which is Teck, and who is our partner, and no one would expect me to compromise that.
No, of course not. And Richard, now, of course, the financing has been delayed. We all know that. That's delayed construction and production timelines as well. Can you give us an update now? Like, what are the next steps here now? What is the timeline to production? Just to give us a bit of guidance and some maybe milestones we can start ticking off here as well.
Yes, and I think I'll give you a very high-level general view, but I think what you will see from us is the definition of these milestones being very clearly articulated, both in our corporate presentations, websites, and every other communication. So anybody interested in Bunker Hill can genuinely see progress and see us moving towards it. We will continue from now the habit of reporting every month by video, and releasing that as a press release, progress, just mirroring best practice out there in the industry, which we think is a good idea. But the question that people often ask is, okay, when are you now, given the delays, which have not been insignificant, when are you now going to be in production? Bearing in mind, you thought it was going to be the end of 2023 this year. And this year's moving by, as it always does, at a rapid pace. So no, we will be we certainly will have first concentrate production in Q4 of next year. We anticipate a number of opportunities to bring that forward into Q3. So I would characterize it as we'll be in production in the second half of next year, and we're going to be pushing for as early in that second half as possible. Now, where do those delays come from? Those delays come from, understandably having to manage our cash burn during the time that we were doing that delayed equity raise, and having to put on hold a whole bunch of procurement, a whole bunch of studies, and a whole bunch of other related recruiting work, which we can now restart. And anybody in the junior or the major space knows that procurement timelines aren't kind to us, and as a result, certain components in terms of getting the whole system up and built are challenging, but there are also opportunities in there. And again, watch this space to see us accelerate. But again, in the spirit of being realistic, think second half of next year, but in the spirit of also sharing with people on this call what every mining company should do, which is to look for opportunities to bring that cash forward. We're going to be very energetically doing that. And you'll find, for those who are interested in the detail, us updating you over the next few months on how that looks. And believe me, the moment we've got certainty about an accelerated opportunity, we're going to release it. So in the detail, though, that we can talk about, if you are walking, you visited the site, what you're going to be seeing in the very short term, and it is in the press release, us doing a number of things in the underground very early on. First of which is ensuring that we've got all of the underground connected to the power grid, so we no longer need to depend upon diesel and so on and so forth. Ensuring that the ventilation systems underground are optimized and ready for mining. And then thirdly, expanding the size, not by too much, it doesn't cost too much to do, of the Russell portal, which is where all our mining equipment will go into, and initially where all the ore will be coming out of. And it's a tight fit right now, and I think you might remember going through it. And there's a lot of inefficiencies that come from just being able to get your vehicles in at a squeeze, and we're going to be expanding that by a small amount. What that should tell you, Kai, is that something we've spoken about a number of times before is that underground is going to be very ready for early mining should an opportunity occur for that prior to the processing plant. And that would only be if we'd done a deal with somebody else nearby who may need or may like to have, or they may see some advantage in buying our ore off us to put through their mill. We'd like to do that, of course, because it's early revenue, but also with mining, it beds things down. And you're going to see a lot of, early, work in terms of resource definition. And I'd love to say, perhaps, but I'm not going to guarantee it, resource expansion over the short term. And that will be interesting to people. Over in the processing plant yard, all of that is going to be worked on to get ourselves ready. If you remember, we suspended the construction of that, so the foundations and so on and so forth. That will be starting imminently, along with all that goes with what is a complex building project, but one that is in a pretty contained and well-defined space, which Tom Francis, our project general manager, and in the processing side, Mike Eislin, our processing manager, and our processing project manager will be energetically working on.
Fantastic. Lots of news. It sounds like lots of moving parts. One quick question. I might have to ask Sam, your CEO, that as well, because he's very in depth involved. Of course, I'm always looking for silver linings as well. Cost pressure on now, like ordering and procuring some of that material you need. Curious if that has eased a little bit. I'm not sure if you can answer that already. I'm curious if you've seen that, because inflation pressure has come down a little bit.
Yeah, and again, we're fairly, we have, and we've said this a number of times, that we're fairly insulated from the inflationary pressures, courtesy of most of our major capital equipment already having been bought. We of course will, be delighted by any deflationary opportunities that occur, and again, they will be there. Sam, closer to that specific than I, would be able to go through that. But there is also, with respect to strategic optimization, where I'm sort of working on, you think about the positive news here. Bunker Hill is going into production. That's number one. Number two, we've now got our financing package together. So that which was stopping us getting onto the Ventures Exchange in Toronto is no longer stopping us. So we should all see us move from the CSE onto the Ventures Exchange on the assumption that there isn't any little gremlin that we haven't observed. But it's always up to now been related to, are you fully financed, which we quite evidently are. And the combination of moving forward, get towards production, combined with getting onto a more senior exchange with all the benefits that come with that, along with what we consider a very clear development path that we'll be reporting on, should it create a lot of interest in this project that will again change the go forward cost of capital in equity and other areas. And so we'll be looking, and Sprott has allowed us to do this, for opportunities to find capital that is at a lower cost to the $21 million debt facility that they provided. Because for them, although it would mean them sacrificing perhaps some of their income, it would also mean, as a partner, we've got ourselves a more robust balance sheet, a lower cost of that part of financing, and could be from equity, could be from whatever, but we're looking at a range of options, including offtakes and elsewhere, to do that over time. But I'd say that's also a very exciting part of looking at this on a go-forward basis.
Fantastic news. I'm so happy that things are progressing, Richard. It's been a long time coming, and let's or Godspeed. Good luck. I can't wait to see our next press releases, see the closing off this financing package as well, and we'll have you back on as well to discuss then at that point as well.
And Kai, if I may, and I know that time is tight, I just want to thank everybody who has supported us through this very difficult time, and not least, and actually more than not least, right up front there, the team that we've got on the ground that has really worked hard through some very difficult times. And that's actually what proves a team and makes a team. So, excuse me. Thanks to them. Thanks to you. Thanks to everybody that has been supporting us. Thank you indeed to Sprott and to Teck, our two strategic partners, and all shareholders who have joined us in this journey to this point. We're looking forward to getting this mine into production and proving to you why your investment is such a good decision.
Fantastic. Richard, amazing closing notes. We're going to leave it at that. And thank you so much for your time. Thank you so much for joining us. And as I said, Godspeed. Can't wait for the next press release and closing of this financing package. Fantastic.
Thank you, Brian.
Awesome.
Bless you. Thank you
Everybody else, thank you so much for tuning in. We hope you found this Soar Financially update of interest. I definitely did, because again, I mentioned it before, I'm a shareholder of Bunker Hill Mining as well. I've been to site numerous times. I'm biased, obviously, but I'm so glad to see this moving forward. This is going to go into production now, so watch out. Watch for accelerators. Watch for other catalysts that might be coming out. Richard hinted at a few things in our conversation, and the stock should finally move. And we've seen it. The stock wants to move. Just look at the chart from last November when they announced that financing. Pressure was relieved. The stock moved up to 24 cents. Financing issues caused the delay there. But why can't we move back to there? Fantastic partners, as he said. Really looking forward to it. Happy to be a shareholder. Let's get this done. Thank you so much, and we'll be back with more.